Welcome back to the deep dive. So today we're going to be really cutting through the noise in the prop firm world. We're zeroing in on the My Funded Futures core plan. These offers, they're always marketed as this simple path to capital, just hit a target, get funded. But the real story is always in the fine print, in the complexity hidden in the rules.
That's exactly right. Our mission today is to give you a true blueprint, to really break down that gap between the marketing and what it's actually like for a trader trying to navigate this in 2025. I mean, what are the specific rules that are acting as filters? And is it even worth it if your style doesn't fit?
Okay, let's unpack this then. The evaluation profit targets, they actually feel pretty reasonable on the surface, but the drawdown rules,
Right.
that's where it gets really restricted, right? That's the real gatekeeper here.
It is. The mechanism that trips up, I'd say, the vast majority of traders isn't really the market itself, it's the trailing drawdown.
Trailing drawdown, okay.
It tightens up so aggressively. I mean, much faster than people anticipate. You hit a new equity peak and bang, your floor just rises right behind you. It gives you so much less room to breathe than a static drawdown would.
Wait, hang on. So isn't that designed to catch you right after you have a successful run? It sounds like it immediately punishes a trader for having one big early win.
It does. That's the perfect way to put it. It forces traders into what we call defensive trading.
Defensive trading.
The practical consequences, you feel boxed in almost instantly. So if you're someone who likes to hold positions for bigger swings, or you trade instruments with high volatility, you just lose your buffer. So many traders fail, not because their strategy is bad, but because the rules are just too constraining for their natural style.
Okay, so let's say a trader manages to dodge that rising floor, that trailing drawdown. What's the next big trap?
That would be the second major hurdle, the consistency requirement. The plan demands that your profits are spread out, evenly.
That just sounds completely counterintuitive to how real trading works. I mean, if I'm a swing trader, my whole month might come from just 2 or 3 really good setups. So the core plan just forbids that approach.
Exactly. You absolutely cannot have one huge winning day followed by a bunch of slow recovery or break-even days. The rule is basically pushing you to force small, controlled gains every single session. And that fundamentally clashes with any kind of momentum or opportunity-based style.
It's fascinating. These rules really do reveal the exact profile the firm is trying to find. But before we get too deep into that, let's answer the big question for everyone listening. Is this thing even legitimate?
Yes, 100%. And it's so important to see that after listing all those restrictions, the plan's foundation is solid. Traders who do manage to stick to that strict discipline, they report that payouts happen. Withdrawals are processed without issue. The dashboard is clean, the rules are clear, and, support actually responds.
So it's legitimate, but it's a highly selective filter. What's the specific personality that thrives under this kind of pressure, and who should just steer clear?
Well, the plan explicitly rewards discipline, patience, and extremely controlled trading. Think of traders with tight stops, small position sizes, masterful risk control. That's who this is built for.
And who's going to struggle?
Anyone who's more aggressive. Or if you're a trader who relies on catching those big momentum moves, these rules won't just feel inconvenient. They'll feel suffocating, outright suffocating. So the essential calculus for you listening right now is that success with this plan, it's less about your market knowledge. It's everything to do with whether your personal trading style aligns perfectly with their very specific, very restrictive framework.
That really does raise an important final question, doesn't it? Given those precise rules, that aggressive trailing drawdown, the strict consistency, what does the structure of this plan tell us about the ideal trader that the firm is actively trying to filter for? Something to think about next time you're reading the fine print.